Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, June the 22nd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And having that out of the way, let's get this on. Not a ton of economic data today. Basically, here in the United States, we got the natural gas storages came in at 61 billion cubic feet versus the expected 55 billion cubic feet. So a little bit higher than expected there. That's not really what's causing the overall crude oil market because, although they are somewhat related, especially with the fracking, the more fracking we can do, the more natural gas we can pull. But crude oil is moving higher. And we also got unemployment claims came in at 241,000, right on line with what was expected for 241,000. So that's about it for the economic data. Overall, markets are pretty quiet. We've got crude oil moving higher moving higher today by 64 cents, but again back above that 78 Fibonacci level. Basically, what I'm thinking of is that $43 a barrel mark. That's the real line in the sand, if you will. Now that we're back above that, bulls are going to try and defend that. That's the real support resistance here, more so than I think that fib line. So might be a time to actually add a few longs in crude oil because a lot of these oil stocks have been beaten up, and I think crude oil has maybe at least made a temporary bottom here, and there might be some opportunities in things like ExxonMobil, ticker symbol XOM. I haven't seen a real turnaround there yet, but I'm going to be keeping my eye on that going forward. Then gold futures bouncing back and forth over this 50 fib level. I just threw this on here because I thought it was very interesting that the 50 fib is really lining up pretty closely to where the point of control is, where the most time and volume has been spent. So that's going to be a really comfort area for for gold futures and gold bugs. If you're bullish gold or bearish gold, this is where the most time and volume has been spent. So everybody's kind of like pretty happy right here because nobody's really making money or losing money. So that's usually an indication that the market is content, if you will. Bonds just trailing off sideways, could be looking like another bull flag, if you will. It's what seemed to be what's been going on in bonds, but I just think it's a little overdone to the upside. Then on to the Dow Jones. I pulled away from that pretty quickly. Let me pull that one back. With the Dow Jones Industrial Average just up slightly today, bouncing off of that 9-day moving average, up 20 odd points, pretty much an inside day. As you can see, this candle's inside that candle there. NASDAQ bucking that a little bit, but as you can see, they're very tight range. Yesterday, NASDAQ had a pretty healthy move, but today slightly down on the day, but at the end of the day, it's just a really tight range, and you can watch it on the E-mini S&Ps as well. Pretty much retracing yesterday's losses, but up about 3.5 points. But this will really show that inside day. We do have this value area low slightly outside of that range, but you can see everything's lining up quite nicely. The way to trade this market profile is if we get this to bounce back in here, right here in this time frame, this 30-minute bar, to come back and pierce below this point of control, that's going to look like the market's going to want to trade down to this value area. So if we pierce below that again and settle inside that value area high, we should see this market want to come down and trade close to 24.31, let's call it. So you'd enter a sell, and then buy it there for the day traders that like to scalp E-mini S&Ps. On to LULU. LULU has had a nice move today. Most part, I sold some puts when we saw this low, got a nice big pop in Lululemon's, retraced a little bit. Didn't look like it really wanted to cover that gap there, and so with it being right at the point of control, I thought this would be a place to sell some puts because it probably just trended sideways for the most part. But today, with a little bit of move higher, I ended up being able to get out of my July 47.5 puts, which that was a great spot for those 47.5 puts. Plus the collection that I got was 39 cents. So with that collection, I was well below that 52-week low. That set up quite nicely. But with this little move today, I was able to get out for 19 cents. So slightly better than 50% of my max profit potential on that. So in line with my rules for that, but I haven't had to have that on for very long. So that was a nice little trade there. Gilead, ticker symbol GILD, nice move today, up over $3. If you remember, I put it on a long call spread in here, and I went into the August and bought the 60 calls, sold the 72.5 calls, and I originally paid $5.50 for that trade, right around there, give or take a couple of pennies. But it's a $12.5 wide call spread, paid $5.50, $7 my max profit, looking to take 50% of that $7 being $3.50. So we add all that together, we come up with around $9 for a target. Today's move it, up today allowed me to get out for slightly better than that. So I was able to sell it out for $9.31. So nice trade on Gilead. Got that nice bounce today and was able to pull out of that one for a nice little profit. Haven't added anything today. Been looking at a couple of different stocks. I was looking at eBay, looks a little bit bullish. FedEx looking pretty bullish, so is UPS. Looking at a few maybe positive deltas in my portfolio. Not a whole lot of bearish chart setups for the most part. So looking for a couple of different things. Maybe add some Exxon Mobil or something like that. Get some long deltas in my portfolio. I'm also looking to get out of Target. It's a dime away, so that's just a working trade. That's probably not going to happen. Had that on as a GTC right now. And then Friday's webinar we're going to be doing on a poor man's covered call, where these are going to be stocks that we are going to hold for a long duration, sell some calls, lower our basis on it throughout that time, and it's going to have an embedded synthetic put in there, so limits our risk to the downside. So rather than buying a stock, buying a put, selling a call, and the call and the put will kind of offset each other, you don't really lower your basis. This type of trade, we'll be able to lower our basis on that long stock in a sense. So it's going to be somewhat of a synthetic long stock. All right, so go to protraderstrategies.com, sign up for that. It's always a really good one. If you can't take that, take it easy.